Hi there, I'm Tyler Bollhorn from StockScores.com. In this video, I'm going to review the charts of some of the major indexes, provide my analysis for the week ahead, and then I'm going to review some day trade setups that I found from today and highlight a very simple thing to look for when making some day trades. To begin, let's review some charts using the StockScores trading desk. This is a new tool that is still in the final stages of testing, but it is something you can use now by going to tradingdesk.stockscores.com. You can see the address up at the top there. This is a chart of the DIA ETF for the Dow, and we can draw some lines here, some trend lines. You can see that that long-term upward trend line was broken late last week, breaking down from a rising wedge. That means we are likely to go lower. How much lower? It's difficult to say. We have support in a number of places. Any inflection point in the past will provide support. These first few that I'm drawing here are not major support, but as we get lower, they get closer together, and that means that there's more and more people who own stock at those prices, and therefore will have more support in that area. Based on what I see here, I think that this market is likely to go lower, although typically after a breakdown like this, you'll get a recoil bounce back, which is often called a bull trap. It'll suck in some buyers before the market moves lower. So I would be cautious with the Dow right now. Canadian dollar remains optimistic, although it has suffered some losses in the last little while, but that upward trend line, that cycle of rising bottoms, remains in place. And so I remain optimistic on the Canadian dollar. It needs to bounce to maintain that cycle of rising bottoms. If it fails and it breaks down through that blue line at the bottom there that I've drawn, I'd be a little bit worried, but generally speaking, the Canadian dollar looks to be one of the stronger currencies in the world. Chart of gold is looking weaker than it used to. It has broken its upward trend line after really running away from it as it did there. It has now formed a falling top. That is a sign of pessimism. In the short term, it does have some support right here, and we saw today that it bounced off of that. I expect that that cycle will continue, but ultimately I think we're going to build this negative pattern that I'm drawing right here, where you'll see it bounce back in the short term, come up to that line, and basically just build in that sort of negative, what we call a descending triangle pattern. So I would be cautious with gold now until it can break that downward trend line. Oil continues to be locked in the pattern that it's been in for some time. It's at support right now at that upward trend line, so it should bounce higher in the near term. It did that a little bit today. I think in the short term there's probably a trade to the upside unless it breaks down below this trend line, and then we need to get a little bit more worried. But for now I think swing traders should probably see a little rally in the oil and oil stocks in the near term. The NASDAQ 100 has been one of the top performing indexes in recent months. However, it too broke its upward trend line on Friday of last week, breaking down from a rising wedge. Again, when markets do this, they'll often come up a little bit, create that falling top before they head lower. So I think in the near term you may see a couple of up days, but looking out a couple of weeks, we are probably lower on the NASDAQ. S&P 500, a similar story. The long-term trend line broken. It does have short-term support at the channel that has been building over the last few months, but that is only short-term support. I think we'll get that little bounce back and then ultimately do this. I'd be watching for a break of this trend line right here, and if so, you'd probably want to take more of a short seller's approach to the market. The TSX, the Toronto Stock Exchange in Canada, has not made the kind of gains that the US markets have made, and so it doesn't really have as far to fall. It remains in a trading range. It's actually just broken through that upward trend line there. However, it still has a rising bottom, or it still could form a rising bottom here. We could see it come down another 50 cents on the ETF before it rallied back, and I think longer term it's building a nice pattern. I remain optimistic on it, although with some caution, because we do need to hold that short-term support. And my final chart tonight is of the US dollar. It is really working on a trend reversal pattern. It has broken the trend line. That was step one. We are now forming a rising bottom consolidation. That is a sign of optimism building. It'll take some time, but I expect to see it move in this, and when we break to the upside from that pattern like that, you're going to see the US dollar rally and probably be one of the better performing currencies in the world. So watch for that. I think we're a little ways away from it now, but that's obviously what's been driving some of the weakness in the commodity market and in US stocks in general. Final thing I want to do tonight is talk about how I day trade the market. I always want to trade abnormal volume. I find stocks that are trading abnormal volume using the market scan on Stock Scores. This is a subscriber tool. It costs $29 a month to subscribe to this tool, and I'll do something very, very simple. I'll scan for abnormal volume and stocks trading at least 7,500 times a day. I'll run this market scan about an hour after the open and then monitor the stocks that I find in that scan, and you can see that we found 32 today, although during the day it might have been more or less than that. And I'll just monitor those symbols through the day in my real-time trading platform. Now here's one of the stocks that came up in the scan today. I'll increase the chart size. You can see here I have my watch list. I essentially took that from the Stock Scores market scan and dropped it in here. What I'm now going to do is review this chart and show you a very simple setup to look for. It is a break of a downward trend line on a stock that is strong for the day. So for example, you can see here a trend line that I can draw right like that. A break of the trend line occurred right here. Another one right there with a break to the upside there. Now my criteria is A, it's got to be trading abnormal volume, and you can see the abnormal volume for today very clearly in the bottom part of our chart here. And the second thing I want to see is that this stock is up for the day and above its open. I don't want to buy stocks that are down for the day or below their open. And ultimately we're just looking for a situation where the buyers take back control from the sellers. We get that when we get that break of the downward trend line. Now all of these strategies are taught in some of my training courses. I'll be doing training courses this spring in Calgary, Vancouver, and Toronto, and we'll also have some online learning on a regular basis here on YouTube. Well, I hope you've enjoyed this week's Stock Scores market analysis. For more information on the tools and services that we provide, give us a visit at www.stockscores.com. Have a great week in the market and trade well.